Well, moving on now, some breaking news. Australia's economy has grown just 0.2% in the September quarter after Australian households tightened up their spending due to cost of living pressures. Let's bring in our business reporter, Ed Boyd, who's been looking through the data for us. Ed, it looks like household spending was flat during the third quarter and Australians dipped into their savings too.
Yeah, look, the household consumption number is the one that always affects Australia's economic growth, and it was flat during the September quarter. Here's a look at the stats. You can see quarterly growth up just 0.2%, annual growth 2.1%. So the quarterly number was lower than anticipated. The annual growth number has come in as expected. GDP per capita down by 0.3%, which means we're still in a per capita recession. And the last chart we saw on the screen just previously show productivity growth is still at really low levels in our economy. Here's what's happened to GDP over time, and you can see it's getting weaker and weaker each quarter. So the household spending number at 0% is an interesting stat that I haven't seen before. And the Bureau of Statistics put that down to cost of living pressures and higher interest rates. And the other part to it as well is the household savings ratio. So Australians were dipping into their savings pretty heavily during that September quarter. The household savings ratio is now down at its lowest level since December 2007. So it's fallen a long way. Remember, back in 2020 during the pandemic, Australians saved up a lot of money. Their household savings levels went to almost record highs, but now it's come right back down to earth and we're at the lowest level since 2007. So some surprisingly weak economic figures that we're seeing today from the Bureau of Statistics for our September quarter. You can see here on the screen, the resources sector still contributed pretty well, although commodity prices, iron ore and coal prices did fall. The agriculture sector had a strong September due to all of the rainfall that we had during July and August and halfway through September. So there were some positive contributions there. But really, it all goes around the household consumer, the Aussie consumer. And when they tighten up their spending, the economy starts to slow down. And that's exactly what happened, Ash.
So, Ed, I see the stock market was up more than 0.5% in early trading this morning. How's it reacting now to these GDP figures?
Well, this is an interesting one because the market, it was up pretty strongly, but we can bring up a live chart and just show you it's actually taken off even more since the numbers came out, because what it implies is Australians did tighten up their spending during the September quarter. Mind you, we've seen inflation reasonably high during that quarter, but it's clear from these numbers that Aussies did tighten their spending. We didn't contribute as much to the economy, which means demand is weakening. You can see the Aussie dollar's up as well, up to 65.67 US cents. And that basically means the stock market thinks the Reserve Bank has finished lifting interest rates. Obviously, the cash rate was kept on hold yesterday, and there was a bit of speculation they might need to lift interest rates again early next year. But these figures really show the economy has slowed down a bit more than anticipated in the September quarter. We're obviously in the December quarter right now, but the market's interpreting this as the fact that interest rates are now at their peak, and they're likely the next move from the RBA up after a hold is probably going to be a cut. So the market is up almost 1% off the back of today's figures.